Hello and welcome to this session where we're going to focus on Southeast Asia's frontier markets. I'm Deepshikha Monga, an editor at DealStreetAsia, and I would request my esteemed panelists to introduce themselves, the frontier market or markets they focus on, and the latest fund that they're deploying capital from. Nori, do you want to go first?
Sure. Hi, my name is Nori Poblador, and I am a founder and managing partner of Navegar. Navegar is a Philippine-focused fund. We raised our first fund in 2013, which is a $120 million fund. And we just raised Fund 2, which is a $198 million fund. Again, only focused on the Philippines. We have a portfolio that includes 8 companies, and our strategy is basically centered around consumption, private consumption, and business services. The Philippines has a very young demographic, and those are the themes that play to it. Although we're focused on that, we've also seen some activity in the alternative space around real estate, infrastructure, and renewable energy. But we're not in that space, but there are others looking at those spaces in the Philippines.
Thura?
Hi, good morning. My name's Thura. Unlike my colleagues here, I'm formally not a GP. YGA Capital is an advisor, and we are associated with TPG, the global fund. I was an ex-banker, worked with my friend Nori there, and then returned to Myanmar in about 2010-11 to explore the scene. And Myanmar has outdone and surprised us and many observers, and I formally represent TPG here. TPG has invested close to $500 million in equity in Myanmar and consumer sector, as well as telecom infrastructure now, where we have 2 portfolio companies. I also advise some of the DFIs, and in particular CDC as well. So nice to meet you all.
And David.
Thanks. Yes, my name is David Ireland, and I'm a senior partner at Navis Capital, and I'm based in Bangkok. And I've been with Navis for about 20 years, and I'm covering mostly Thailand, Vietnam, Cambodia, Laos, and Myanmar. But I've been in the region for even longer than that. I first moved here as an adult in the mid-90s, and I worked at one of the first private equity funds in Vietnam. So I lived in Vietnam for 5 years before moving to Thailand. And Navis is a dedicated or primarily dedicated Southeast Asia fund. We're on our 8th fund now, and we are deploying capital into these frontier markets, both through our conventional funds, but also a special purpose fund that we've just set up to invest specifically in the CLMV region.
All right. To kick things off, let's talk about the role that you think the pandemic will have local or regional PE firms play in the markets that you're in. Do you see bigger GPs take a step back in the near term or even the medium term? Maybe start with Thura. You're not a GP, but you advise others and you're associated with TPG. Can you help us understand?
Sure. I think the pandemic in many ways has presented enormous challenges and similar challenges to all of us. I mean, the first primary concern is, of course, the public health. And with a very poor health infrastructure like the one we have in Myanmar, we just have to take very severe actions. And so our government, to their credit, has handled it as best they can. We had a full lockdown in end of March with all of our airports closed to regular international traffic. And that has, I think, been the one key factor. I don't think we could have managed this pandemic any other way. And then subsequently with the second wave and so on, we've had further local lockdowns and domestic travel lockdowns as well. That's been a huge inconvenience. And of course, that has had a knock-on effect on business prospects, sector prospects as well. And at some point, I think the economic costs becomes too great, and we now have to, and we are in a position of slowly opening up. But in terms of GPs and LPs in particular, obviously the travel lockdown is an immediate thing that comes to mind. And this is where I think the local GPs, and we have a number in Myanmar as well, have an opportunity to actually step up, because the pandemic will play out in many different ways, and each will be different in each country and each sector, and indeed even each businesses. All challenges allow business owners to differentiate themselves, and it's really those with local eyes and ears on the ground, and that's our job as YGA for TBG and others. And I think the nuances will only be picked up. And also those like us, a bit old-fashioned, who prescribe to the belief that physical meetings are incredibly valuable to making that connection with business owners. I think that's also a challenge for your traditional larger GPs. And so I think that local GPs, or those with local eyes and ears on the ground, obviously have an opportunity here to step up.
Yeah, I agree with, go ahead.
Go ahead, Nori.
No, I was going to say I agree with Thura. I suppose the Philippines is infamous for having the longest lockdown globally. I think we went on lockdown from March, and we've only come out of it at the end of October. But even then, we're still in some kind of quarantine. And I think the biggest challenge really is relationship building. And this is a country where if you're going to make an investment, you'd better press the flesh, sit down over meals, have lengthy meetings with potential partners. So that's certainly a challenge, even for those that are on the ground. I think even if you get past that, then there's the physical challenge of doing due diligence. Because it's one thing to expose yourself maybe to the founders and the shareholders and the potential partners of the business. But if you're going to do due diligence and mobilize your accounting and legal teams and have them, be physically doing due diligence with the teams of the companies that you're looking at, I mean, that's also a consideration. So it's difficult, but I think GPs have to adjust. And I think over time, the locals can probably adjust faster, but I expect the regional funds to be able to adjust as well and be creative. I mean, at the end of the day, we're all collecting 2% management fees, right? And you can't be sitting around saying, oh, I can't travel, therefore I can't do due diligence. I mean, you've got to be doing something, and you've got to find a way to do it, right? But I think the locals have an advantage, definitely.
Yeah, I would agree with that as well. I mean, but I think the key here is that companies, continue to need capital, but even greater than before, and sourcing capital is harder because for exactly some of the points that you've said, and some of the bigger funds will also, they may be interested, but if you're feeling risk averse, or there's there are logistical issues, familiarity with the market, you'll hesitate a bit to, or there'll be easier places for you to take those chances. And that is a role where a local or a regional player, and we're a regional player, but we have offices in some of these markets. We have portfolio companies in the markets. We have trusted partners and things like that in those places. And as Thura said, the eyes and the ears on the ground are important. But for example, we did our first Zoom deal during the lockdown in Cambodia. And it was our first transaction in as a direct. It was a certain amount of trepidation to do that, but it worked, and people adapt. And again, we were familiar with the market. We've been in and out of the market. This particular transaction, founders, we had met them prior to the lockdown in early on in the process. So again, we didn't have a deep and long relationship, but we had met them a couple times. And so then once we were able to get on Zoom. It was easier. And then again, you use third parties for due diligence and things like that. So it's possible. In fact, it's really the new normal. So we continue on. So I think the role of the regional and the local players will be increasingly important. It's really critical for this time to raise capital. And because there's a level of familiarity to do those kind of deals, whereas the bigger, more international funds may take a step back, at least for now.
David, you talked about sourcing of capital, and while some of the bigger GPs may be interested based on the growth potential of these markets, the LPs may not look at these as great investments at this point. They might be more risk averse. I would like to ask all of you if you see the DFIs, the development finance institutions, continue to be a bigger part of your LP base. Do you see them playing a bigger role at a time like this? Or do you see enough interest? Do you think these markets have proven their potential enough to attract other investors, other large institutional investors beyond the DFIs?
Maybe I'll jump in. My view on that is the DFIs are still really critical, and they are really knowledgeable and experienced in these markets. So I think they can interpret, or they can feel more comfortable as they do this. That said, again, we're investing through our conventional funds as well, LP base as well, and I'm the one who's covering these markets, so I get a lot of from conventional LPs, and they are interested. And what's happened in Vietnam, we went back 5, 6, 7 years ago. Vietnam was, a real frontier market as well, and it's grown and stabilized and become such a source for interest and transaction. I think people are looking at these other markets in a very similar manner. So there is interest and appetite to have some exposure. The traditional LPs are not as familiar, and they might be somewhat risk averse, but I don't think it's like, oh no, we would never do it. But for the time being, the DFIs, I think, will play a very important role.
So sticking with you, David, you do expect DFIs to contribute most of the capital for the 150 million co-investment fund that you're raising for the CMLV markets?
That's true, but our conventional funds, which has already raised, will also be participating in that, and has always had that mandate to invest in these markets. So, when people invest in Navis in the Southeast Asia Fund, they know that there's the possibility or probability that they'll get some exposure to those markets as well.
Sure. Nori, you've recently closed a 198 million fund. What's your view based on conversations with LPs?
Yeah, I can compare what Fund 1 looked like to what Fund 2 is. And when we were raising money in 2013, we fully expected the DFIs to be the only ones to show up, right? And yeah, they did make up majority of the LP base, but surprisingly, we also had a few European family offices and a Japanese financial institution. For Fund 2, we thought, okay, maybe the same DFIs will come back, but maybe they'll make up less of the LP base. But funnily enough, we ended up with double the number of DFIs. So from 3 DFIs, we went to 6 DFIs. But having said that, the Japanese financial institution also recommitted. The European family offices also recommitted. And then we had a few, we had an American pension fund come in, surprisingly. And we had a couple of Asian-based institutions come in. So yes, the DFIs will continue to play a large role, hopefully on to Fund 3. But there is interest from LPs. But I will say a Philippine-only fund is an acquired taste. And what I noticed was that the institutions, the non-DFI institutions that come in, have spent a lot of time getting comfortable with the Philippines. And any investor that comes in for future funds has to be of that ilk. And you know, when I say a lot of time, these institutions have basically been looking at the Philippines for 5 years before making the decision. They've made numerous trips, have spoken with so many people in the markets, and it really takes them a while to get comfortable with what the Philippine opportunity is. But I think once you've made that decision, then you're fully invested, and you know, things like the pandemic and things like the political situation, they don't seem to bother the investors. And once they've gotten that passed and have made that decision, it's almost like they're all in, and you know, nothing will stop them. It takes a special investor who's done a lot of work, I think.
Yeah, I think
Sure.
I would concur with that as well. Obviously, I'm a step removed from the LPs as such, but where we have stayed close to our traditional LPs in completely throughout the years, educating them on the Myanmar market, the Myanmar potential. And at the end of the day, when you're able to deploy capital and deliver an exit, I think that counts for a great deal. And so you'll find the traditional LPs remain interested. And obviously we're TPG is a regional fund, so it's slightly different, but they're not allergic to these markets, even post-pandemic. And actually, in frontier markets, and this is particularly true in my country, where you don't have alternative sources of capital, where the banking sector is nascent, where we don't have a steady flow of foreign fixed income suppliers, and private capital is the way to go forward, and the only source of capital available for established businesses, then I think the traditional LPs who still need to deliver returns will still be interested. And as long as you've got good GPs who've stayed close to them, educated them throughout the ups and downs of an economy and of the politics, then I think you'll find them still having the confidence. But it's true to say, of course, that the DFIs will, by their very remit and definition, will have that much more patience for markets like us. And you'll see some peculiarities as well. CDC, who I also work with, because it's the British government backed, because they're going through a Brexit, they are having to lean in more on some of these new markets. And you'll find them looking closer and closer at the ASEAN markets as they begin to form their own relationships with our economies. So you'll have some peculiarities there as well.
I think it's the same with the GPs also, Deepshikha. So if the LPs have made that, have done their work and have gotten comfortable with the Philippines, you know, they become invested in the market. And I think it's true with the GPs as well, right? And if you look at who's been making investments in the Philippines in the recent past, I think you can count KKR, which has made 3 investments already, CVC, which has made 2 investments, 2 exits. Warburg Pincus made an investment last year. GIC has made an investment. So it's not just the LPs, but it's also the GPs who have studied the market and that, you know, and who have gotten familiar with it and comfortable with it, that will continue to look at the Philippines.
Sure. Nori, you earlier talked about you know, the political situation. David, I'll take that. You know, I'll start with you. How do these other developments, you know, the political unrest, you know, the government control or clampdown even in certain markets on tech firms, changes in the government, all of those changes, you know, make these frontier markets slightly, you know, a more risky proposition for investors typically. But at a time like this, when there are economic headwinds, how does this, you know, go on to complicate matters? Do you think it affects the overall attractiveness, and how much?
Oh, I think it's part of the equation for sure, but I don't think it's just the frontier markets having those type of issues. You can look at my home country, which is I'm American. We have a lot of turmoil in America in the last few months as well. So I think it's part and parcel. I mean, what's been happening with protests or crackdowns. I mean, that I've been in Thailand since the early 2000s, and we've had 2 coups. We've had street protests on an annual basis, and Thailand remains an attractive investment location, and from LPs as well. So I think, of course, there's some concern, and if you look at repression and things like that, none of that is new. I think it's part of the equation that you put together. But again, all of these countries, and it's not just unique to the frontier.
Thura, do you want to comment on the Myanmar?
Well, I think Myanmar wrote the book on political shocks and surprises and so on, and we continue to do so. So, but I think what's most important is the underlying trend. Fortunately for Myanmar, I genuinely do believe is in the right direction. It'll never be a straight line in any of the markets we operate. And as we discussed before, just staying close to your committee, staying close to your LPs, and kind of explaining to them the background behind some of these ups and downs is incredibly important. Myanmar, as you've all probably picked up, we just went through an election process during the pandemic season. It was extremely well organized, 85% voter turnout. And of the available seats, 83% went to the NLD party. So almost an even larger landslide than last election. So that bodes well in terms of continuity, stability. It may also encourage the NLD to be firmer in terms of economic reforms and also political reforms as well. As I say, I think as long as the underlying direction of political maturity and so on is going in the right direction, I think the GPs and the LPs will read through that, and we'll all be better for it.
Honorio, do you want to add to that?
Yeah, I won't lie. In 2016, when President Duterte was elected, there was some concern because he's a very controversial personality. And I think the most positive thing to happen after his election was Trump being elected in the United States, because for the first year that Duterte was elected, he was always on the front page. And when Mr. Trump got elected, he sort of got relegated to page 6, or not even in the papers anymore. But yeah, I think seriously, if you look at why he's controversial, it's his manner of speaking, it's his irreverence, it's his being unpresidential. I think that the 2 most controversial policies that he put in place have been the war on drugs and the foreign policy, which he's trying to balance the US versus China. In the beginning, it appeared like he was favoring China. I think now it's sort of shifting the other way. But I think what the foreign policy has done is it's actually made both the US and China try to play ball with the Philippines. And I think the knock-on effect is other countries like Japan have also tried to play a greater role in terms of investments, etc. And on the war on drugs, obviously it's a human rights concern. But if you talk to the man on the street, they're actually very happy and ecstatic that their daughters can now walk around at night feeling safe. And because, and this is all pre-pandemic, obviously, because our theme is driven by private consumption. Anytime there's comfort and safety and no safety concerns, that obviously helps spur consumption activity. So even though he's controversial, it seemed to work in our favor. He's not the most conventional and the most Western in terms of values, but if that's really an issue, his term's ending in 2022, so that will also go away at some point, right?
I think it's important to note that private equity, we're coming in, we're investing in we're particularly focused on political investments, we're focused on consumption. These are all things that aid in the development of society. So, of course, political protests and coups, things like that, democratic behavior. If your remit is that I will not invest in a country that doesn't run a revolution, you won't invest in these. You won't invest in these countries. But otherwise, we're not taking sides. We're not trying to make political statements at all to improve and develop the industry.
Okay. David, your audio is choppy, but I think what I understood was that as investors, you're not taking sides. Correct?
Correct. Can you hear me better now?
Yes, thank
Okay.
you. All right. Let's talk about some of the opportunities in these markets. Of course, one of the ways, the silver lining to the COVID-19 pandemic has been the fact that it's really accelerated the adoption of digital services, whether it's among consumers or businesses. Talk about this opportunity, vis-a-vis the challenges that it's presented to the economies, in terms of job and income losses and other things. But how big is the opportunity? And we can start with you, Nori.
Yeah, I think we were extremely lucky to have made an investment in an e-commerce enabler in January before we knew this was going to happen, right? And the thesis then was that e-commerce penetration in the Philippines would deepen from 1.8% of GDP, which is the lowest in the Southeast Asian region, and certainly less than a tenth of penetration in China. So that was the thesis. What the lockdown did was it accelerated the importance of e-commerce as people were restricted from going out of their homes. And if you look at, and yes, the pandemic has caused unemployment, has put the damper on consumer spending. But I think what that's done, consumer spending will continue. Maybe the size of the pie is smaller, but I think there's a rebalancing of what people spend on, right? And people, have stopped eating out, but they're buying more groceries. Maybe they're trading down from more expensive imported stuff to local stuff. But I think what e-commerce has enabled or allowed people to do is it's allowed them to buy the supplies they need, even though they were physically restrained from going out. And if you look at how our company has performed, we're basically going to do in 2020 what we thought the company was going to do by 2023. So we're 3 years ahead of plan because of the pandemic. Now, will that level stay as people are allowed the freedom to go out? Probably not at the same level, but I think you'll retain the habit, maybe 80% of the habit. So I think it's been a good thing, and the trend is here to stay, definitely, and it's accelerated rather quickly because of the pandemic.
What about what about Myanmar? We've already seen some investments there. The Ant and Wave Money investment happened earlier this year. But what are the other opportunities you're seeing on the ground, Thura?
So I think in similar vein to Philippines, the digital economy has really taken off. And it all started back with the telecom privatization like no other in 2014 when we started investing in the infrastructure here. Mobile penetration was only 8%. Today, you have about 85% user penetration, well over 100 SIM card penetration. And we're not competing, Nori, but I think we have more cell sites per capita than the Philippines at the
That's
moment.
probably true.
So that has really, and what's important here is that our people went immediately to mobile internet. We have the highest smartphone penetrations. And so our people are using the internet without even knowing it. It's just second nature to them now. Social media and e-commerce on Facebook and so on. And the other important trait, and I think this is true in all frontier markets, is that our people are incredibly resourceful. And so when you face challenges and when you are losing your daily income and so on, you find alternative means and you begin to learn what can you do on social media, what can you do in terms of e-commerce and so on and so forth, what can you do in terms of delivery and services such as food delivery, grocery deliveries. Now you have online grocery deliveries. Even the mom and pop entrepreneurs are working in each and every local townships and villages and so on. So I think that's been a huge game changer. More importantly, also the government, whereas they were a bit cautious of embracing e-government, has now very much adopted it. Social welfare benefits and COVID payments have been done online across these various platforms. So I think the opportunity is there. The key to taking it further is fixing some of the structural challenges that still exist. So logistics is still a problem, and investing in logistics is an issue. And the interoperability of these platforms and the interoperability of the banking platforms and so on. We still need reforms in that places so that all these platforms can synchronize with each other and so on. But once we've seen this potential, I think if we begin to embrace some of the reforms needed on that, then I think you'll see huge opportunities there. And it knocks on, right? You then have education online, you then have healthcare online, because simply the new world is one of spacing out and social distancing and so on and so forth. So you'll see opportunities in that space as well.
David, you focus on more than one market, so maybe it'd be good to just compare how they've fared.
Yeah, I think the whole adoption of digital services, I agree with the others. It's really critical and in generating new opportunities. From our view, I mean, there can be a exposure to that through an e-commerce platform or something like that. But for us, it's a bit more, how does the service strengthen a kind of a traditional business? And Thura mentioned education. And that's the one that I have the most direct experience with, both in Cambodia and Vietnam. We are, we're a significant investor in an private education platform. And both markets, totally shut down in the middle of the school year last year. And because this capability existed, we were able, and because we had invested in it really for other reasons, not expecting this to happen, we were able to kind of pivot very quickly and provide and continue to provide, education to kids during that time. It's not seamless, and anyone out there who is a parent to a kid during the lockdown will know that there were challenges. But both of the two schools that I'm referring to in the southern part of Vietnam, I think they were able to strengthen their competitive position because they had invested, they had the know-how, and they were able to provide at least a meaningful education experience. Thank God we're back in school now, physically in both of those places. But it taught us a lot, and it also taught us that there are a lot of other functions that we can do in terms of platform across the CLMV region, in terms of sharing best practices, in terms of sharing teachers, even by doing something online. One thing I would say, though, that's important, and I echo Thura in this sense, is that specifically in Cambodia, or particularly in Cambodia, the connectivity has to be there. You have to level the play. so that if there is these situations that people have the resources to be able to avail of the digitalization. And so there were instances in Cambodia in particular where certain students didn't have a good enough internet connection to make it a meaningful experience, and only in rare instances. But I think it went further into the countryside and across all of these markets. That's where big portions of the population live. I think there has to be big investment into that to be able to allow their citizens to benefit.
Sure.
I'll add to what David said. And what Thura said. So if you look at what is needed to allow digital to be successful, you need to invest in the underlying infrastructure that needs to be present, right? And if you look at KKR made an investment in payments into Voyager. Warburg Pincus made investments into Converge, which is a broadband provider. Crescent Point made investments into LBC, which is a last mile logistics provider. So, money has to go into those different sectors for the digital potential to be achieved.
Sure. We have less than 5 minutes for this session, and I would ask attendees to send in their questions using the Q&A box if they have any. Meanwhile, let's talk about, we've talked about the opportunities. Some of these markets have seen bigger funds being raised. Nori, of course, you have the 198 million fund. Navis is raising the 150 million co-investment fund. What is making you guys so optimistic? Do you think GPs are still ahead of the startup ecosystem in this regard? David, we'll start with you.
I mean, we're interested. Again, we've always been interested in these markets, and again, I referenced briefly, 10 years ago when we were already starting to invest in Vietnam, when it was at a similar stage of development, maybe a little bit of ahead. But I think we're interested because we're here. We have experience in working in these markets, and they all have a really good growth potential. There are real opportunities to do that. There are challenges, and I think you'll see more money being raised to invest in these markets, but other things will have to catch up. So the ability to do due diligence, to be more transparency, to have the infrastructure around you, that you have the advisors that can enable you to do that. So I think we're still in that transition phase. So again, it's probably a little bit back to the first question about familiarity with the market and the role of local funds or regional funds. But I think for sure that we are interested because there's growth there. We've been down this path in other countries, and each day we do a deal or we operate with a portfolio company, we learn a little bit more, and it becomes a little bit more normal and a little bit more mainstream. So I think that that's a process that takes a number of years, and we're somewhere along that way.
Nori?
Yeah, the biggest question we had in 2013 when we were raising the fund was, can you deploy capital into the Philippines in private equity situations, right? And I think since then, GIC has deployed over $2 billion. KKR has deployed close to $1 billion. Warburg Pincus maybe 200. Crescent Point maybe 100. CVC over 100. We deployed our full $120 million fund. Our $198 million fund is already partially deployed. So clearly, you can put capital to work. The market maybe is not as fertile as more developed markets, but there are opportunities to put capital to work. I think what we want to see is maybe the ecosystem of local funds being built up, right? Because today it's us and a couple of others, some in the VC space, some in the infrastructure space, but it's really just us. And what we want to see is that develop into a more vibrant ecosystem that includes other players as well.
Sure. And before we go, Thura, do you want to comment on the 2021 outlook for Myanmar? What's the expectation?
Yeah, so I think the underlying factor is we will have a new government, and hopefully it will be more confident in rolling out more reforms. And so that ought to bode well. I think also the pandemic has given all of us an opportunity to get over challenges and so on. And it's really going to be interesting to see which companies, which players, which GPs also adapt to the new normal quicker. So where there isn't the usual growth, perhaps, I think companies that focus on consolidating their strengths, shoring up financing, and we did some of that earlier in the year for our businesses here. Maybe strengthening management in some cases. This is a real opportunity to just strengthen your house and kind of get efficiency gains in your operations. And so I think the future looks pretty good. And hopefully we're seeing all these vaccines come in. It'll be incredibly important how governments distribute these. But I think the opportunity is one of consolidating your existing positions, strengthening them, and then I think opportunities will come thereafter.
All right. That's it for this session. Thank you so much, gentlemen, for joining us and sharing your insights and perspectives on these markets. We hope you enjoyed the session. Thanks, and stay with us for the rest of the event. Thank you so much.
Thank you, Deepshikha.